If you've ever wondered how to follow order flow correctly and stay on the correct side of the market, in today's video we will explain just that. And as you can see here, we have pretty much a chart with executions on it, which will be proven to be true, as you can see here on the screen. So as you can see here, we entered the market today trading NASDAQ 100. This is of course a demo trade just for educational purposes only. The market model, which would have to be the advanced ICT unicorn model, and we made a video on that and we went very in depth about it. So if you want to watch that, make sure you guys go check that out. And as you can see here, we had a inversion fair value gap form, and then eventually we had a sweep of internal. We had an inversion fair value gap, we disrespected it, order flow was switching, and then eventually, as you can see here, we had a breaker block form, and then we entered at the breaker, the retest, and then eventually we went up higher. And I'm gonna explain to you guys why this trade was viable in the first place. If we go to the higher time frame, if we go to at least like the hourly chart, we have a 1 hour buy side imbalance. And as you can see there, we came and we retested, and eventually we respected it, and then eventually we looked for buys, because on the 1 hour we were looking very bullish. All right, so in order to use the 3 PDA rule, you have to first understand what the 3 PDA rule is, and we're gonna go very in depth about it here. So first and foremost, you need to understand how do you measure order flow. We made a video about this, but it's, quick summary is going to be highs and lows, fair value gaps, and order blocks / breaker block. You use the 3 PDA rule to show your stop loss on whatever time frame you're trading, and I think this is very important whenever you're using the 3 PDA rule stop loss. So as you can see here, our entry was at the breaker, and then eventually we had a BISI, but then eventually we had a inversion fair value gap, multiple fair value gaps overlapping at one point. So we had an inversion, and then eventually we had a BISI that was created there, and this would have to be like a balanced price range. So as one PDA array, you can just say it's two. So this is going to be your first PDA array, this is going to be your second, this is going to be your third one right here, the breaker is going to be your fourth one. But as you can see here, we never really need the breaker block, but we did have the stop loss down there. And again, we had multiple fair value gaps. You want to see these fair value gaps get respected, and if you want to scale time frames correctly, you go to a different time frame to find one fair value gap only instead of multiple. And then eventually, we entered, we went up higher, and then eventually we left another pair of fair value gaps. So we had two more fair value gaps, one right here, then we had another one, and then eventually we had a mitigation block form. So as soon as we saw that, we wanted price to run past this, and we did get a run past this sell side imbalance. We were trailing and we were trimming the position, and then eventually we went past it. We formed another form of mitigation, and then we had another sell side imbalance that eventually became an inversion fair value gap, and we were trimming again, and then eventually we let it come back down into the original, since this one was very small and doesn't have as much volume as this one. And then eventually we went up higher, we created another order block, and then eventually we got stopped out, and the stop loss was right here. So I'm going to go over why I trailed my stop to right there. So that's going to be your first PDA array right here, this order block. The second one is going to be this one right here. So that's going to be your second PDA array right here, this order block. This low right here as an intermediate term low, because you don't want to see price ever come back to an intermediate term low. I believe intermediate term lows are very strong in price delivery, and they should not get swept if you are planning to see price go higher, especially after having so many PDA arrays form and order blocks form. You don't want to see this get disrespected, nor this right here. And then this would have to be my third PDA array right here, since we did have another little propulsion block form, and you can see price went up and it came back, and then it disrespected the first PDA array, and it disrespected my second PDA array, which would have to be the order block. We closed near the bottom half of it, and then eventually you can see here we came and we wicked down. I didn't use a fair value gap for this reasoning because we already made it inverse, and I wanted to see institutional order flow respected, which is order blocks in this scenario here in this trade. And that's kind of why I trailed my stop all the way up there into this intermediate term price point. If I would have trailed it to right here, I think that would have been even better. If not, somewhere right here, the lines around here. And then eventually you can see price just chopped around and didn't really do anything much for the rest of the day. As you can see here, if you time frame pair using the 3 PDA array rule with market maker models, that is by far one of the most powerful things you can do whenever you're trading. And I've seen people use the 3 PDA array rule as a form of a model. The enter as soon as 3 PDA arrays have been created and respected on different time frames, and I've seen that 3 PDA array rule executed beautifully. Time frame pairing, I believe that's going to be a separate video on its own, time frame pairing using market maker models. But again, here you're measuring the order flow by highs and lows, fair value gaps, and order blocks. So again, here you have a low that eventually was a form of mitigation, and then eventually disrespected that. So that is your first PD array rule. Have a sell side imbalance. Eventually you made inverse and you flipped it. So that is another PD array. And then you're your order block 2, disrespected, and that's how you know order flow is switching. As soon as you see 3 PD arrays disrespected, that's how you know order flow is switching. Simple as that. We have a bullish fair value gap right here, respected nicely. And in this scenario, you wouldn't have wanted price to go up and tap into that and then eventually respect the bullish fair value gap. You would have wanted price to disrespect that bullish fair value gap, turn it into an inversion fair value gap, and then continue lower, form a form of mitigation or some form of market structure shift, so we can retrace back into that and then drop lower. In this scenario here, order flow was switching, and this is how you're able to identify if the market is switching. That's all you do. You watch the bearish PD arrays and you see if they get disrespected or not, and if they do, price is likely to switch in the order flow. Or in this case scenario, you have a bullish PD array form and you are retracing back up into the bearish PD arrays, and if that bearish PD array holds but then it holds the bullish one, you wait for one side to get disrespected, and it's simple as that. And in this scenario, you can see we went up, we came back down, and we respected that bullish array and we disrespected the bearish arrays here, all right here. This right here eventually became mitigation, and we used it as a means to retrace and then go higher. That's how you know you are switching order flow and you are on the incorrect side. And the 3 PD array rule will save your life when you're trading, trailing your stop loss, or measuring order flow and don't know which side you are, which side is correct. And this is a fractal model. This is fractal on every time frame. You can use it on the 1 minute, we can use it on the 5 minute, you can use it on the hourly, you can use it on the daily, on the monthly, on the 3 month. It doesn't matter. This, the 3 PD array rule can be used on any time frame. But again, if you're trading and you have a trade open, you go to that trade, the time frame you entered that trade upon, that's where you draw the stop loss on. Again, so we have another example here. We have a market structure shift low, and then this is an overlapping array. So these are 2 PD arrays overlapping, and then eventually you can see we made that inverse, and again we had the high or the low. We had the low disrespected, and we had 2 up close candles here, which is a form of an order block. And as you can see here, we disrespected that, and eventually we used it as a form of, we used these PD arrays as a form of inverse. Of course, the order block wasn't really respected nicely. As you can see here, the low that created that market structure shift did get respected because it eventually became a balanced price range. But as you can see here, we never ever came back down to the balanced price range. We barely came close to the market structure shift low, but eventually we had this right here. We had the retracement and we went up higher. And the main reason why is because we already had a buy side imbalance right here that we were retracing back into. So again, this is very, very important. Whenever you are going to a bullish array and you create a bearish array, you want to see either one, the bullish array get disrespected and used as a form of inverse, or you want to see the bullish array hold and eventually make that bearish array inverse and go higher. That's all you want to do. There's only 2 scenarios that can happen, and you have to be very, very patient. You either hold the bullish fair value gap and you disrespect the bearish one that you had and use that as an inverse, or you either disrespect the bullish fair value gap and you respect the bearish one and you make that bullish one inverse. As simple as that. That's all it is. Just having patience and using that correctly. So again, we have another example here. So we have a sell side imbalance that eventually became inverse. We have a prominent low that we used as an overlapping array, and you can see that eventually got inverse, and then eventually we had an order block there at the price lag up there, and eventually you can see we were respecting it at first, and then eventually we made that inverse, and eventually we used the sell side imbalance that became inverse as a means to push us up higher. Same with the fractal market structure shift, which we never retraced back into. So again, just seeing if you are on the correct side. As soon as you see the order block get closed above right around here, that's how you know you are on the incorrect side. Even just the fair value gap is enough, in my opinion. Once you have 2 PD arrays disrespected, it's very, very likely that the third one will likely get disrespected, in my opinion. So that's all really is very, very important. So again, here we have another example. So we have a very prominent low, and then eventually we have a sell side imbalance. We did disrespect, and then eventually we never retraced back into that old prominent low that we did disrespect. And then eventually you can see here we had the order block up there get disrespected, and at first we were holding, and then eventually we disrespected it, came down all the way down lower, and eventually we went up higher. But again, this trade would have not been valid because your stop loss, even if you had it at the high up here, you would have got stopped out. And that's very, very important. Just being able to identify this and understand, if you're on side or if you are in the incorrect side. Mitigation and is a bullish array right here. Again, you either want to see the bullish array get disrespected or you want to see the bearish one. And in this case scenario, we respected the bullish one and we disrespected the bearish arrays. And as simple as that, just being patient, understanding where the market is going, understanding the PD arrays and using them in real time, and just being patient. That's all it is. If you wish to understand how to trade the 3 PD array rule more effectively, make sure to watch and learn how to use the advanced ICT unicorn model. And until then, I'll see you guys later.